I'm Bill McWilliam, President of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is home ownership consultant Ross Kay from thewealthyhomeowner.ca. Ross, many of our listeners are hoping to buy a home or move to a bigger one, but they're worried about making the right choice when prices are high and interest rates are climbing. You talk about your ability to time the market, and we're wondering what tips you could give our listeners on when is the right time to buy.
Well, the right time to buy, obviously, I mean, one of the long-standing old real estate sayings is actually true. The right time to buy is dependent upon you and your situation. Certainly, if you're going to be a homeowner for a very long period of time, say in excess of 20 years, probably almost any time is the right time to buy. When you're talking about timing the market, Jim, what you're really looking at is maximizing the financial gain that you're going to make on a house. So if you purchase the right house at the right time, you're going to be saving yourself tens or hundreds of thousands of dollars, versus if you buy it at the wrong house at the wrong time. So most families cannot handle $100,000 to $200,000 loss over their lifetime when it comes to retirement. So when it comes to retirement, that $100,000 or $200,000 that you lost may be the difference between whether you're able to have a really nice retirement lifestyle, a constrained retirement lifestyle, or be forced to live a retirement lifestyle you never had any plans on making. So this is where the timing of the market really makes a big difference, and it's where your listeners need to understand the following. A housing market is either a buyer's market or a seller's market. There is no such thing as a balanced market. A balanced market is impossible. A balanced market is a term created by realtors for realtors to earn commission. A real estate market is either a buyer's market or a seller's market. In a seller's market, it means the demand for homes versus what homes are for sale forces the buyers to pay more than what the house is actually worth. So the seller gets more money for their home than what it's actually worth on the day that it sells. In a buyer's market, it's just the opposite. There are not enough buyers to meet the demand of sellers to get their home sold. More houses are listed for sale than the buyers that are out there looking to buy them. And this allows the buyer to pay less than what the value of the home is really worth on the day that it sells. Now, traditionally, real estate is never talked about this way because people don't know how to measure what the value of a home is, or they can't measure whether or not you're overpaying for a house or you're underpaying for the house. Now, there are metrics that are available for home buyers that take all the aspects of the housing market, and it actually measures this supply and demand balance, or imbalance, I should say, on the specific category of home that you're looking to buy. Now, those categories of homes always have a shifting supply and demand factor, and that means that the time that you're looking to buy should vary depending on the category of home that you're looking to purchase. If you have the quality metric on the house, in other words, if you know that if you're spending $1, but you're getting $1.10 for your worth of value for your money, you're doing really well. If you're spending $1 and you're only getting 90 cents worth of value, you're overpaying for something. Your homes are exactly the same way. Now, the amount of quality you purchase for each home buying dollar is a current metric. So that is something that is measurable today, and it will change tomorrow and the next day and the next day. So it is one of the rare measures of a real estate market which are actually measuring at the moment you're ready to buy. So at least you know whether or not you are paying a premium for the house that you're buying. In other words, the house isn't actually worth what you're paying for it. It's actually worth less. Or you're buying a house that's actually worth more than what you're paying for it as of that specific day. Now, real estate agents use this term market value, and then you hear everybody say a market value is what a willing buyer will pay to a willing seller that a willing seller is willing to accept in their property. They claim that as a market value price. What I will tell you is that a negotiated price is not market value. It is going to favor either the buyer or the seller. At times, like back in 2016, in the spring of 2016 in Vancouver, you were paying overpaying by as much as 60% if you were buying a single detached home in some parts of Vancouver. In other words, you were paying a premium dollars for a home that's way, way, way down the pecking order. I will also tell you now in Vancouver, you are not paying, if you're buying a single detached home at the higher price categories, you are not paying what that house is actually worth. You are underpaying for those homes. That spread can be 15 to about 23%. That spread can be 15 to 23% at any one moment in time. And unless you are buying the home, knowing exactly what kind of a premium you are paying on the day that you're buying it, or the kind of discount that you're getting on it on the day that you're buying it, then you're buying it under terms you shouldn't be buying it under. You're buying blind is what we call it with in-house here. You should never buy a house blind. You should know. There's nothing wrong with paying $1.05 and getting $1 worth of home back. As long as you understand you're paying $1.05 and only getting a dollar's worth of home. There's nothing wrong with a seller getting 90 cents for every dollar's worth of value their home has, as long as they understand that's what's going on. Organized real estate and sales representatives and real estate brokerages who make their money on sales don't want you to know these type of calculations. So over the last 50 years, they have spent no efforts doing it. These calculations are mathematical in nature. They are precise. So what I say by that, your listeners need to understand is, if you're looking at 100 houses priced at $1 million, and you were to ask an appraiser to rank those houses in value from 1 through 100, the appraiser could easily do that. There's the best house that's offered for sale at $1 million, and there's the worst house that's offered for sale at $1 million. Now, if you're buying the first, second, third, fourth, or fifth house, you're probably getting at least your money's worth on the property. You know, for every dollar you spend, you're probably getting $1 in value. Once you start dropping below the 7th, 8th, and 9th house, then you are actually paying more and getting less. What you have in some markets, like you had in the GTA in the spring of 2017, was about 80 out of those 100 houses were selling. So the poor family who purchased the 80th ranked home was probably only getting about 80 cents on their dollar, versus the person who bought the first house, who was probably getting, because of the market, about $1.02 for every dollar they spent. Now, when you get into the price categories of hundreds of thousands of dollars, that 22-23% spread is massive, Jim. So what your listeners need to understand in terms of timing the market, you want to be purchasing the type of home that you want to own at the time when you are getting the most value for your home buying dollar on the day that you buy it. That way, even if you're not timing the market in terms of purchasing at peak and at trough, or you're not looking at long-term ownership, at least over a 24-month period, you're purchasing at the best time that it was for you at that over those 24 months. Your listeners really, I really encourage you, do not purchase a home if you are not knowing on the day that you're purchasing it what value you're getting for your home buying dollar. It is a mathematical calculation that can be done for you on any home in Canada. Before I went on here today, Jim, I looked on realtor.ca and I found over 140 homes listed on realtor.ca for exactly $1 million. If there were only 140 of them, those would be ranked from the best house at $1 million to the worst house at $1 million. I hope your listeners aren't the people who are foolish enough to buy the 70th best house, or the 50th best house, or the 30th best house out of 100. I hope that they're smart enough to be in that top 1 to 5 or 1 to 7 buyers. I hope that if they're buying, they get the metric that tells them exactly what a home is worth.
We'll have more with Ross Kay right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
Welcome back. We're chatting with Ross Kay. Ross, there's many tenant groups becoming increasingly political across Canada, and we're seeing many recommendations being made to politicians about getting their votes. How do you view this strategy, and how do you interpret potential outcomes?
Well, the strategy, Jim, is extremely high level. It is a high-level strategy. And every homeowner in Canada had better listen to what I'm going to say next on this topic. In Vancouver, it is going to be the base case for what happens when tenants dominate political voting. What happens when politicians don't allow enough single detached homes to be built in a community or a municipality? It means that density comes into play and high-rises are built. Now, in the vast majority of Canada, single detached homes outnumber condominiums in municipalities. Like in the city of Toronto, the single detached homes, the number of them, way outnumber the number of condominium high-rises as of right now. In Vancouver, Vancouver is the test case because the number of condominium high-rise far outnumbers the number of single detached homes. And what that means is a family who's lived in Vancouver for 20 years, purchased a home 20 years ago, and is living in it today. They've taken care of it, paid their taxes. Right now, the tenant groups across Vancouver are aligning themselves with political parties. Those tenant groups, it's very possible, are going to control the makeup of your municipal government. Now, this is not a conspiracy theory. This is simply an understanding of how the housing stock in municipalities is and how it evolves over time. When the best thing for a nation is extremely high home ownership rates. When you have between 70 and 75% home ownership rates, it means that municipal governments will be making decisions that are in the best interest of homeowners. Once your home ownership rate drops below about 62 to 64%, we don't know the exact number, my firm, Jim, because we haven't completed enough research on this. But we know that once it gets into that 62 to 63% area, that the tenants groups and tenants who are legal voters in municipal elections have a high chance of taking over municipal governance. Now, all of your listeners in Vancouver, for the sake of the argument here today, and every other municipality in Ontario where you hear these planners and politicians claiming that we need density, density, density. We need more rental housing stock, more rental housing stock, more rental housing stock. Instead of encouraging more single detached homes being built, more single detached homes at a lower price by allowing more land to be built on. Encouraging higher rates of home ownership, not by giving money away, but just by making sure the stock that is out there is adequate, in adequate supply to keep prices down. What's going to happen in Vancouver, potentially with this election, is that these tenant groups are going to align with different political parties, and those political parties are going to win positions on your city council. If you're a homeowner in Vancouver, think about this. What happens if your municipal politicians owe their loyalty to tenants? Tenants do not pay property taxes. Tenants can impact the vote in terms of what landlords are able to increase their rents. Therefore, they can both raise your property taxes and keep their rents basically what they are today by using their municipal voting power to get the politicians to enact those decisions. Right now, you're seeing a speculator's tax, and I heard today that it's going to be relinquished a bit. Okay, that is a result of a vocal minority who is now becoming your voting majority in Vancouver. The politicians listen to them. Those people are going to vote the politicians in or out. Your net wealth is tied up in your family home. What we need to be doing as homeowners across this country is demanding that the politicians make decisions that increase the home ownership rate. Because homeowners always make rational voting decisions at the municipal level. If the infrastructure is crumbling, they will say raise our taxes. If they see money being wasted, they'll say keep our taxes where they are or lower them. Tenants won't do that. Tenants are only interested in tenants issues, which is keeping rents low, sub-market level rents, adding to the subsidized housing stock, meaning homeowners subsidize the rents of others in the community, and they also want to limit house price gains because of their fear that, or their hopes that someday they'll get into the market. So these tenant groups, when I see out in Vancouver, I think Van City, they're actually registering these tenant groups who they're aligning with. And when you see your home ownership rate drop, meaning your tenant rate is increasing in a municipality, and tenants have an equal vote to what a homeowner does, you are going to have a natural conflict that appears in the future. And if the politicians allow that to happen, it's irresponsible that they would allow it to happen, but that is happening right now in Vancouver. Your homeowners' net wealth is going to be impacted by it, because what they will do is they'll say, we need to raise property taxes. Our property taxes are so low in Vancouver, they need to be doubled. And once you double them, then you can provide us with all of these services. Our vote is equal to the vote of a homeowner. We're not talking about a federal or provincial government that takes care of our social programs. We are talking about municipal governments who take care of the homeowners in that and business owners in that community. Unless your listeners and all homeowners in Vancouver think about the consequence of a municipal government being controlled by tenants, you have no idea what the road ahead for you is. The reason why net wealth and real estate, one of the tracking measures we use is home ownership rate. So when someone says, Ross, should we buy in this community? Should we buy in this town? Should we buy in this town? We look at home ownership rates. Vancouver, Jim, is not a place we recommend people are buying in right now, because your home ownership rate is dropping too quickly. Voting power at the municipal level is going to change. Homeowners are going to bear the brunt of that change, and it's going to be a financial consequence. So I believe everybody has equal rights. I believe tenants are entitled to rent controls. I'm a firm believer in rent controls. They have to be structured. They have to be rational. They have to be based on real costs of the building and interest rate costs and actual profit margins, real profit margins, not cap rates like has so commonly talked about in the press, but the real profit margin that is caused through rental housing. That is something you have to be thinking about. Yes, give them the vote, but in consideration of giving the vote, make sure your politicians are making decisions that ensure the housing stock in your municipality is growing more on the home ownership side than it is on the rental side. The moment that imbalance happens, homeowners' net wealth is at risk. And that's my comment about tenant groups becoming increasingly political.
We'll have more with Ross Kay right after this.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Ross Kay. Ross, a listener, was going through old newspaper files found back in 2012, looking at how the market was being viewed back then. He came across an article about fears of CMHC running out of room to insure mortgages and that it could kill the market. Of course, last week, 5 years later, non-insured mortgage fears were making headlines. What exactly should our listeners believe, the story from 5 years ago or the ones released last year?
What your listeners should be believing is that This is a natural consequence of how a housing market functions. So when we read the articles back in 2012, actually I think they started around 2010, because the Conservative government had to increase CMHC's threshold, the amount that they were able to insure, several times. And the last time they raised it in 2012, I think they raised it to $600 billion. And they were worried that it was bumping up about $590 billion, and they were worried that there wasn't enough room. CMHC was going to have to stop insuring first-time buyers buying homes, which would have been a major catastrophe for the country. The banks, everybody was on and on about this. All the rating agencies, if you can Google this stuff, all the rating agencies back in 2012, early 2013, they were all talking about this, and this was the reason for a housing market collapse back then. This is why the market was going to crash. I think there were books in that were written by people about this time, specifically citing this. If someone had called our firm, we would have told them, no, uninsured or insured mortgage debt is going to be increasing right on through till mid to late 2013. And as we got closer to that date, two or three quarters out, we could tell the people who were asking us exactly when that insured CMHC mortgages were going to stop being insured at the same rate that they were being insuring at. And then we would have also told them at the same time that the uninsured mortgage debt at the exact same moment was going to start increasing. And normally, within a 12 to 24-month period, people were going to start complaining about uninsured mortgage debt increasing too high. This is simply how the housing market functions. When you understand the trading cycle, and you understand how buyers move through the market over a 2-year period of time, normally over a 2-year period of time, you understand that the insured to uninsured ratio ebbs and flows over that cycle. And that ebbs and flowing is a specific pattern. As the last trading cycle lasted such a long period of time, a historical record, it only made common sense that uninsured mortgage debt was going to be booked at a historic pace because the trading cycle lasted as a historic length. When the trading cycle is over, all of a sudden, your insured mortgage debt will start to increase again. And unless the old CMHC mortgage debt was being paid down rapidly enough by those homeowners, then CMHC was going to come up against its limit again. Where the problem is, in the articles from 2010 or 12, the articles last week, is that economists do not understand the real estate trading cycle. They do not understand that mortgage debt is going to evolve over the course of the cycle. Not only is it going to evolve in terms of insured versus uninsured, but also the magnitude, the amount of debt that is going to be booked as new debt, as new mortgage debt is going to be recorded. That's why you hear these people making these false claims about debt to GDP. They don't understand that when you have a historically a trading cycle which reached a historical record length, you had to record historical new mortgage debt being booked. It had to happen. The two things go hand in hand. The trading cycle dictates mortgage debt. So your listeners who are listening back to the Conservative government of 2012 and 13, Mr. Flaherty's, all of the concerns that he had about mortgage debt and CMHC running out of room, our firm could have told him, but Mr. Flaherty, you have to understand this is going to change in the coming months. We will tell you exactly when it's going to change, and you can watch the uninsured start to take over. And the same thing would happen right now. If Mr. Morneau called us, we would say, Mr. Morneau, last fall when we told everybody on Howe Street that the amount of new mortgage debt being booked is going to decrease, he could have made adjustments based on that intelligence. But because economists do not understand how housing markets function, because it's not taught to them at university, because real estate agents don't understand what I'm talking about, the trading cycle is the hidden gem and the secret of realty markets. It tells you everything that's going to go on. It tells you whether Home Depot is going to increase in its sales or Lowe's. It tells you whether or not the Bank of Montreal is going to book new mortgages or not, or their mortgage book is going to shrink. It tells you whether or not the number of mattresses that are going to be sold is going to increase or decrease. It tells you what kind of cars people are going to be purchasing or not purchasing. The realty cycle, the trading cycle, the realty trading cycle tells you all of these things. You only have to look at the data to see that happen. Clearly, no one's looking at the data on mortgage debt based on the realty trading cycle, other than Ross K. Realty Consultants. That is what makes us able to time the market, because we know what's going to happen tomorrow, because what's going to happen tomorrow actually took place months and months before. It's the same over and over and over again. Your listeners need to understand you cannot escape the power of the trading cycle. It is all powerful. It is increasingly becoming the belief of my firm that the business cycle is not all powerful. It's actually the trading cycle and the realty cycle, the trading cycles make up, that is really what drives the overall economy. Certainly the economy in consumption-driven economies.
Ross, thank you so much for chatting with us.
Hey, thanks for having me on, Jim.
My guest has been home ownership consultant Ross K. from thewealthyhomeowner.ca. You're listening to HoweStreet.com radio. Find us on Twitter at HoweStreet. Our YouTube channel is Talk Digital Network. Questions for the show or for Ross can be sent to info@HoweStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of Howe Street Media Incorporated.